America stands at a crossroads, its heartland trembling under the weight of twin crises that threaten its economic soul. In the industrial Midwest, the once thunderous hum of General Electric's factories has faded to an eerie silence. For over a century, GE was a beacon of innovation, powering hospitals, homes, and aspirations. Its plants were not just workplaces but the lifeblood of communities, where families forged legacies of hard work and pride. Now, those factories are shutting down, with production shifting to Mexico, Eastern Europe, and Southeast Asia. This is not merely a corporate maneuver. It is a seismic rupture in America's industrial narrative. Across the Great Plains, a parallel disaster unfolds. America's farmers, the backbone of its food security, face a crisis unseen in decades. President Trump's escalating tariffs on China, one of America's largest trading partners, have provoked retaliatory tariffs that are choking exports of wheat, soybeans, and sorghum. In just the first 60 days of 2025, U.S. sorghum exports to China plummeted 94%, turning silos into grain graveyards. Soybean farmers, once reliant on a 40-year trade relationship with China, watch their livelihoods evaporate as prices collapse. From shuttered factories to unsold harvests, these crises signal a turning point. What do they mean for America's workers, farmers, and economic identity? Are they the fallout of protectionism misfired, or a glimpse of a globalized world where borders no longer anchor production? Let us dive into the forces reshaping America's heartland and chart a path forward for its workers, farmers, communities, and place in the global economy. The agricultural crisis is a stark warning, with numbers that shock even seasoned analysts. In early 2025, U.S. sorghum exports to China, a market that once absorbed 90% of Kansas and Texas output, crashed from 1.4 million tons to a mere 78,316 tons, a 94% wipeout. This collapse, triggered by China's 34% retaliatory tariffs on U.S. farm goods, has left domestic sorghum stocks swollen by 42% to 150 million bushels, driving cash prices below those of corn, a historically cheaper crop. Farmers like Dan Atkinson in Stockton, Kansas, see last year's harvest languishing unsold, with new contracts canceled as Chinese buyers impose indefinite halts. Grain elevators offer prices so low that selling incurs losses, while storing grain risks financial ruin. In the Texas Panhandle, some feedlots have resorted to blending surplus sorghum into livestock rations, a desperate measure to stem the bleeding. Yet domestic demand cannot replace the $1.5 billion in revenue sorghum once generated when ships docked at Guangzhou. Soybeans, America's largest agricultural export, are equally battered. Since 2018, China, which once purchased 60% of U.S. soybeans, has slashed imports by 63%, pivoting to Brazil and Argentina. U.S. soybean stocks have surged to 380 million bushels, a four-year high, with prices plummeting to $10.10 per bushel, a 30% drop from 2023's $14.97. With input costs like fertilizer and fuel soaring, farmers like Gary Schnitke in Illinois face negative returns, with production costs at $9.65 per bushel outstripping market prices. Many are switching to corn or leaving fields fallow, accepting a loss to avoid deeper debt. The USDA projects a 4% drop in soybean acreage for 2025, signaling a retreat from a crop that once defined the Midwest. Meanwhile, Brazil's soybean exports to China hit a record 17.7 million tons in Q1 2025, capturing 26% of the market and eroding America's dominance. Wheat exports paint a similarly grim picture. In May 2025, the USDA reported an unprecedented negative 49,100 tons in wheat bookings as cancellations outpaced sales. South Korea scrapped 65,300 tons, and the Philippines canceled 12,000 tons, only to sign a 110,000-ton deal with Australia days later. Why abandon U.S. wheat, priced $8 to $12 per ton below competitors? The answer lies in a trust deficit. Trump's 25% tariffs on Asian steel and aluminum, prompted China's 34% grain tariffs, and shipping lines added $9 to $12 per ton risk surcharges on U.S. contracts, fearing further trade disruptions. As a result, U.S. wheat's CIF price in Asia now exceeds Black Sea wheat, a reversal unthinkable before this trade war. The Great Lakes storage system holds 2.1 million tons of unsold wheat, up 37% year-on-year, while North Dakota growers sell at 40 to 50 cents below break-even. America's global wheat market share has dwindled from 44% in 1980 to 11% today, ceding ground to Russia, which exports over 40 million tons annually despite sanctions. The livestock sector faces its own pressure cooker. Nearly 1,000 U.S. meat processing plants lost China export licenses in 2025, jeopardizing $5 billion in deals. At Shanghai ports, tightened customs protocols force U.S. meat containers to undergo costly X-ray scans, with many spoiling after days of delays. Storage charges have jumped from $800 to $1,200 per container, and clearance times tripled. The U.S. Meat Export Federation reports a 12,000-ton pork cancellation by China, dragging bookings to a yearly low. Chicago futures reflect the pain. June lean hog contracts fell to 89.78 cents per pound, an 8-month low, while live cattle prices slid as traders brace for consumer pullback. Every 1 cent drop in hog prices wipes $15 million off monthly sector income, mirroring sorghum's catastrophic losses. Domestic pork prices dropped $3.82 per hundredweight in a single day, and broiler prices in the Southeast fell 7% in April amid a supply glut. If this continues, the USMEF warns, another 1 million tons of meat exports could vanish within a year, slashing 12 to 15% off producers' margins. General Electric's industrial retreat compounds this agricultural devastation. The closure of plants in Ohio, Pennsylvania, and New York has gutted communities like Erie and Schenectady, where GE's factories were economic and cultural pillars. These facilities, producing locomotives, medical equipment, and energy systems, employed thousands and sustained local businesses, schools, and services. Now, diners sit empty, schools face budget cuts, and community centers close. GE's decision stems from the same tariff-driven pressures afflicting farmers. Tariffs on steel, aluminum, and semiconductors have raised production costs by up to 15% in some plants, while supply chain disruptions delay schedules. Faced with shrinking margins, GE relocated to Mexico, Poland, and Vietnam, where wages range from $2 to $4 per hour compared to $25 in the US, and trade agreements like the USMCA offer tariff-free market access. GE's restructuring is not a temporary fix, but a wholesale redesign of its global supply chain, prioritizing cost efficiency and resilience against political volatility. The supply chain breakdown amplifies both crises. Ports like Portland and Los Angeles have seen outbound volumes drop by 51% and 17%, respectively, as shipping lines impose surcharges and cancel sailings. At Los Angeles, vessel calls fell from 12 to 5 per day, leaving wharves silent. Containers are scarce, with Kansas growers unable to secure 40-footers for sorghum and Iowa soybean contracts delayed. Freight costs for wheat, corn, and soy have surged 40%, rendering U.S. goods uncompetitive. A proposed $3 million levy on Chinese-built vessels threatens to raise freight costs further, prompting carriers like MSC to cut sailings. Meanwhile, Canada's 25% tariff on $30 billion in U.S. goods, including John Deere parts and pesticides, has raised input costs. With 80% of U.S. potash sourced from Saskatchewan, farmers face a $100 per ton fertilizer hike, adding $60,000 to a 2,000-acre Nebraska corn farm's expenses. The USDA's pause on new credit lines and deferred payouts exacerbate the cash flow crunch, mothballing silos and dairy barns. The financial squeeze is relentless. Farm banks report delinquencies at 0.55%, up from 0.36%, with substandard loans hitting 8% of portfolios. Chapter 12. Farm bankruptcies surged 55% in 2024, evoking the 1980s crisis that erased 200,000 family farms. In North Dakota, elevators operate on 3-day weeks, and Iowa's Alliance Grain Co-op cut 10% of its workforce. Farmers like Caleb Ragland, president of the American Soybean Association, warn that many are one crop failure from ruin. In industry, GE faces $2 billion in transition costs, but projects 20% operational savings abroad, buoying investor optimism despite short-term volatility. Commodity markets, however, are in free fall. Soybean futures linger at $10.20 per bushel, a death line where over half of Midwest farms lose money. Wheat prices are undercut by Russian and Australian competitors, and livestock prices teeter as domestic gluts depress margins. The human cost is profound. In Erie and Schenectady, GE's factories were more than jobs. They were cultural institutions where families passed down skills and pride. Workers now face bleak prospects, with a machinist in Erie lucky to find work at half the pay, sans benefits. Rural America mirrors this devastation. Farmers who once fed the world now watch silos overflow with unsold grain. The loss transcends economics. It is a fracture in America's identity. GE's factories and family farms symbolized a nation that built and sustained itself through ingenuity and labor. Their decline erodes the promise that hard work secures a future, leaving workers and farmers adrift in a globalized economy that seems to have left them behind. The policy roots of these crises reveal a stark paradox. Trump's tariffs, intended to shield American workers and farmers, have backfired spectacularly. By raising raw material costs, they've driven GE abroad and cost farmers $27 billion in exports from 2018 to 2019, with soybeans bearing 70% of the loss. China's 34% tariffs and suspended import licenses have locked U.S. goods out, while competitors like Brazil and Russia seize market share. The USDA's $23 billion in bailouts during Trump's first term, plus $10 billion in 2024, have been band-aids on a hemorrhaging wound, failing to restore lost markets. Tariffs on Canadian potash and equipment have inflated farming costs, while the cancellation of billions in USDA funding, including climate-smart programs, has gutted rural resilience. These policies, coupled with aging infrastructure, some GE plants rely on 1980s equipment, and regulatory misalignment have created a perfect storm. The global power shift is unmistakable. Brazil's soybean exports to China surged to 26% market share, while Russia's wheat exports top 40 million tons, dwarfing America's 11% share. China's Made in China 2025 and India's Make in India initiatives draw investment with modern infrastructure and incentives, while the U.S. lags. Vietnam's 300% surge in manufacturing investment over a decade, fueled by trade pacts like the CPTPP, lures firms like GE. This shift threatens not just economic dominance but national security. If GE's medical equipment production moves abroad, the U.S. risks shortages of MRI machines and ventilators, as seen during COVID-19. Losing agricultural markets undermines food security and strategic ties. China's $24.7 billion in U.S. farm imports supported nearly 1 million jobs in 2022. As competitors gain ground, the U.S. forfeits technological expertise, supply chain control, and geopolitical leverage. Historical parallels underscore the urgency. The 1980s farm crisis, driven by high interest rates and low prices, wiped out 200,000 farms and devastated rural communities. Today's crisis, fueled by tariffs and trade wars, risks a similar toll. The Smoot-Hawley Tariff Act of 1930, which deepened the Great Depression by choking global trade, offers a cautionary tale. Protectionism, without strategic support, can amplify economic pain rather than alleviate it. Yet history also offers hope. The post-World War II Marshall Plan rebuilt Europe through investment and cooperation, and the 1990s tech boom transformed America's economy through innovation. These precedents suggest that bold, coordinated action can reverse decline. The path forward demands a multifaceted strategy. First, invest in infrastructure. Modernizing ports, railroads, and energy grids could cut factory energy costs by 30% and ease port congestion. Upgrading the Los Angeles port to handle 12 daily vessel calls again would unlock billions in exports. Second, reskill the workforce. Germany's Industry 4.0 model, blending automation, AI, and training, has sustained its manufacturing edge. U.S. community colleges could partner with firms to train workers in robotics and precision agriculture, ensuring jobs in high-tech factories and farms. Third, reform trade policy. Tariffs can protect strategic sectors but must be paired with incentives. Tax credits for sustainable manufacturing, R&D grants, and regulatory streamlining. South Korea's industrial strategy, aligning education, infrastructure, and policy, offers a model. Fourth, support farmers immediately. Congress must pass a $15 billion emergency package to offset freight and storage costs, coupled with trade risk insurance to stabilize rural economies. Fifth, rebuild global trust. The White House must lead multilateral trade talks, cooling the tariff war and restoring buyer confidence. A new Asia-Pacific trade pact could counter China's dominance and open markets for U.S. goods. Innovation offers untapped potential. Precision agriculture, using drones and AI to optimize yields, could reduce farming costs by 20% per Purdue University studies. Green manufacturing, like producing solar panels and EV batteries, could create 2 million U.S. jobs by 2030, per the Department of Energy. Public-private partnerships, like those behind the CHIPS Act, could fund innovation hubs where startups and firms like GE develop next-generation technologies. Community-led initiatives, such as Iowa's renewable energy co-ops, show how local action can drive resilience. These solutions require investment but promise long-term gains, transforming America into a leader in sustainable industry and agriculture. The stakes are existential. If the U.S. fails to act, it risks ceding its role as a global economic powerhouse. The 94% sorghum collapse, GE's exodus, and negative wheat bookings are not anomalies but symptoms of systemic strain. Without intervention, the U.S. could face a replay of the 1980s farm crisis on a larger scale, with millions of jobs and billions in revenue lost. Rural communities, already hollowed out by decades of decline, could become ghost towns. Industrial cities like Erie could follow, losing their economic and cultural moorings. Nationally, supply chain vulnerabilities could jeopardize health and food security, while competitors like China and Brazil solidify their dominance. Yet America has overcome greater challenges. The industrial boom of the early 20th century, the post-war recovery, and the digital revolution were forged through vision and unity. Today, the nation can rekindle that spirit. Imagine factories humming with green tech, producing wind turbines and medical devices. Picture silos emptying as global demand for U.S. grain surges. Envision rural towns thriving with new industries, from biofuels to tech startups, and workers trained for the jobs of tomorrow. This future is not a dream but a blueprint, achievable through strategy, investment, and courage. The crises of GE's retreat and the agricultural collapse are not the end but a call to action. America's factories can roar again. Its farms can feed the world again, but only if we act now. Policymakers must craft a national industrial and agricultural strategy, balancing global competitiveness with domestic resilience. Businesses must innovate, embracing automation and sustainability. Communities must adapt, fostering new opportunities to replace those lost. Together, we can rewrite America's economic story, not as a tale of decline, but as a saga of renewal. Will we rise to the challenge or retreat from the global stage? The choice is ours. What do you think? Should America rethink its trade strategy? What sacrifices are we willing to make for jobs, resilience, and independence? Share your thoughts below. If you care about the future of American industry and agriculture, subscribe to World in Focus and activate notifications to stay informed. The time to act is now, before the next factory closes, before the next harvest rots,